Okay, we'll go ahead and get started. Welcome, everybody. Okay, so what I would like to do today is just share some charts with you guys, go over what it is that I look for when trading breakouts. I want to go over the importance of the quality of the setup and what a traditional breakout that we see on FinTwit when people post screenshots, this huge crazy breakout, how that can work, but also how breakouts can work that don't necessarily have to be this ginormous range expansion on high volume, like we often see screenshots on Twitter. How different breakouts can actually look, and so that's what we're gonna do. So I'm gonna share my screen here, and again, if you guys have questions, please write them in the chat. Okay, and then can I just get some yeses in the chat if you can see my chart? The chart is ALPN. Yes. Okay, perfect. Yes. Okay. Okay. All right. Thank you. Okay. Got it. Thanks. Thanks, guys. Okay, so this is a great setup here. What I look for in a breakout is I want to see a 20% or greater leg one. Okay, and so typically that's going to start either with something like this, which is a big ranges expansion, big candle on high volume, and then you see the persistent buying in the coming days. Okay, so we don't want to trade it when it's in this buying phase. Okay, we want to wait until it pauses for a minimum of 2 days. And I like to look between 2 and 7 days of tight narrowing action, and then the continuation. So we have this 53% in 6 days. Okay, and then it pauses for a few days, and then it gets these two really tight closes here. So what I want to share with you guys today, and the big takeaway, is this breakout candle here is not a massive 8, 10, 12% candle. This is it's less than 5% candle, okay? And it kicks off a almost 40% move. And again, the volume, it is above average volume, but it's not 2, 3, 400% of the average volume. And so typically people will pass up on buying on this candle because what they want to see, or what their expectation for a breakout candle, is a candle that is something like this, a big candle here. And then so they go, well, this can't be a breakout candle because, this can't be a breakout candle because it's not closing into new highs. It doesn't have 200-300% range expansion, and it doesn't have 200-300% volume. But you can see it kicks off a 40% move. So when scanning, it's important that we are looking at today's candle first, okay? And then we look at the previous 2 to 7 days. We're looking for the range expansion. And then we're looking beyond that for this persistent buying uptrend here. So you see I have it labeled 1, 2, and 3. So whenever I'm going through my scans, I typically run a 4% breakout scanner. It's just 4% greater than $1, and average or the trading volume is 100,000 shares. And I'm just clicking through charts, and I'm looking to see how does today's candle look? Is it close to the high? And then how does the next, or the previous 2 to 7 day candles look? So basically, first thing I look for is this candle. The second thing I look for is these two candles, and then I look for the persistent buying. So this is what we need to train our eyes to do. We look at today's candle. Then we look at the previous 2 to 7 days. Then we look for the momentum before that. That's how we need to train our eyes. And we go through charts, and we can look at this repeating over and over and over again. And I think that is this is how we need to start training our eyes and start looking at charts in a different perspective. I think that we oftentimes we want to trade this big gap up, right? It's exciting, it's fun, it's fast, but it's the consolidation after the big momentum that presents the opportunity for the entry. So we see here, this is a trade that I recently took. I took it on this, not because of this downtrend, but I took it because we have this minimum 2 days tight. We have this minimum 20% move, and it was closing near the high. Now, a lot of people I saw on Twitter, I saw a lot of people buying on this day because seems more like a breakout candle to a lot of people. And in fact, a lot of people bought on this day and got stopped because they were looking at taking a breakout past here. So the idea here, and what I'm hoping we get out of this, is trying to find a lower entry in the swing, the start of the swing, rather than the breakout from a flat base. So we can keep seeing that. We see, for this example, this is the start of the swing. Now, it didn't get very far, but this candle here is the start of the swing, okay? So that's the idea here, is we want to find the entry that kicks off the swing, not that is breaking out of this base. Okay? So we'll keep on going through some examples. So this was a stock that I was watching. I was hoping that it was going to hold here and then break out, and I would have taken the entry as it started the swing. But it failed, and so no problem here. SG, this is a great example. I posted this on Twitter a few times. So I saw a lot of people buying this candle, okay? And this is not the breakout candle. The start of the swing is right here. You can just use your eyes, and you can see where did this start, right? Where did this leg of this momentum start? It started here. Okay? The start of the swing was right here. You can just use your eyes and you can see it started the swing up here. So why were people buying this candle? Well, people were buying this candle because it got on their scanners with this action here. So they FOMO'd into the swing super late. And what happens? It fails. So if you're not catching the start of the swing, then you're buying late. And people don't want to hear that, but it's the truth. When you buy this candle here, this is kicking off the next swing. You could buy this candle, and this would have worked. This would have 100% worked, buying this candle. But that's not the start of the swing. We need to find the start of the swing. The start of the swing is this. Okay, is that starting to make sense? Can I see some yeses in the chat? If that's starting to make sense. If you have any questions, please take a second to either get on to your mic or type it in. But this is the point of the video, is showing you, okay, good, is showing you the difference, a new way to look at breakouts, a new way to look at how do you find the start of it? Well, so the start of a swing, right? You never know when the start of a swing is going to be until after the swing. But that's what trading is. You're taking a chance. You're trying to take the highest probability chance of the start of the swing. Same thing when you buy gap ups. When you if you bought this candle here, you don't know what's going to happen the next day. You're just hoping and you're thinking, okay, tomorrow the stock is going to go up. It's the same exact thing that you do when you try to time the start of a swing. Is you are buying, anticipating that this is the start of a new swing. You can look at this candle here, right? And then you can think to yourself, okay, what's going to happen tomorrow? Is it more likely that it's going to go down tomorrow, or is it more likely that it's going to go up tomorrow? You don't know. Just like you don't know anytime you buy a stock, you don't know if it's going to go up the next day or down the next day. But using your eyes, right, and you have to go through hundreds and hundreds and hundreds of charts to see the natural swing trading in the swing of price action naturally occurs all day, year-round, for hundreds of years in the stock market. And so what we're trying to do as swing traders is just participate in the naturally occurring ebbs and flows of the market. The stock is going up, it goes down, and then it goes up, and then it goes down. And we want to try to catch the start of the swing. Can we say range expansion is the start of a swing? Yes. So typically, right? So that is a criteria, and we'll go through some of the criteria of what makes a candle worth an entry or qualify as an entry, and what doesn't. And so, what price will you enter? So here's the thing. So when this comes up on your your scanner and it meets your criteria, you buy. It could be 10 minutes after the open, or it could be an hour before close. The criteria, and so now we'll get into criteria. So for example, like I showed in the very beginning, the criteria is going to be actually I'll show this. It's a 20% leg one. Let me just pull up this. Just give me a moment, please. Okay. Can everybody see? No. Okay, give me a second. Sorry about that. Okay, can everybody see the continuation breakout slide that I'm presenting? Okay, so this is the criteria. Is you want a 20% or greater leg one. That's going to be your first leg of the momentum, right? First leg of the momentum, the persistent buying, high volume, big range expansion, and then it's going to drift, pull back some, consolidate. You want narrow range, tight closes for 7 days, for 2 to 7 days. But the previous 2 days must be tight closes, and And so you can have 7 days of consolidation. If the 2 days prior to your breakout are having range expansions, even medium-sized range expansions, then it does not qualify as an entry. It needs to be too tight. Yeah, too lynch. So this is stock B, too lynch, and so too lynch is 2 days, not 2 days up, linear action, young. So it's the start of a trend. Closes high for the breakout day, and so that's what we need to do. We need to qualify each breakout based on how well it's consolidating here, and then the strength of the first leg. So this is what I look for. I look for strong momentum up, consolidate, narrow range, and then the breakout. So you'll have range expansion and volume, but it doesn't necessarily have to have this candle. Like the first example I gave did not have this big, huge range expansion. It doesn't have to be. Even if the stock was just like this, you still qualifies because you're having that range expansion. You had the 2 days tight, you had the 7 days consolidation, and you had the 20 days or 20% or greater. Is that making sense? Okay. We'll start going through some more charts, and then okay. So let's go through some more charts here. So this was a breakout, a continuation breakout that occurred on Friday. This is the entry here. If on Monday it breaks out and like this, people are going to enter, right? But they're entering late because the swing started. This is a good example because the swing starts here, right? But this does not meet our criteria because these 2 days are not tight. So we are looking for a candle which meets all of the criteria. The start of the swing does not necessarily mean it's the breakout candle, if that makes sense. The breakout candle has to meet the 2 lynch criteria the stock B uses. I have modified it a little bit, but typically, yes. So you need 2 tight closes. You need the how do you know if it's tight close? Okay, so you can see how this is the close of this candle, and that's 95.68. Okay, and then the close of this candle is 95.32. So you see how close it tight and tight. That's what I mean by tight. So the stock closes here 96.45 and then closes here 94.60. That's not tight. Okay, you see these 3, 4, 5 closes. That's very tight action. And so if you wanted to, you could have tried. Well, no, that wouldn't have worked, right? Because this isn't tight here. Okay? This isn't having 2 tight closes here. Can 6th candle prior be considered a breakout? April 25th. April 25th. Where's April 25th? Okay. So is this considered? No, because it's not. It is not closing out of the consolidation. It needs to break out. So it needs to move up. Okay, this would be just considered another tight close. Now, if this candle here would have closed a little bit higher out of this range, then that would have been a good entry. And then that would have been the start of the swing. But that's not what happened. Any other questions? Do you have criteria and percent? No. No volume also on the 25th. So the volume thing, right? A lot of times the volume doesn't really show up until the end of the day. Yes, volume. Yes, volume can definitely play into that factor. But if it meets all of the criteria and is lacking volume, I still take the trade. Okay? And I know that goes, what will be the entry point here? So the entry point for this candle is whenever it hits your scanner. And I know people get very confused and people get like, they start to go crazy because it doesn't make sense to some people, because people are always seeking the lowest possible entry. And so if you entered, let's say, for example, let's go to another chart here. Okay. So GCT, okay, 56% move, pulls back, tight closes, and has this big breakout here. Okay, so if you entered anywhere in this day, right? Anywhere, whether it was the second the market opens or the minute before the market closes, the swing still works, right? You could have captured 200+%. Of course, no one is going to trade the whole 200% move, but let's say you just trade it for a week. You could have easily made, even if you bought the close and you sold it here, that's 33%. Okay? Let's say you bought it at the very high of the day and you did a stop loss at the low of the day, which is a very wide 14% stop, right? Typically, you would want to do, if you're buying near the end of the day, you would want to buy half of the range. But let's say, for example, this would be the lowest, right? 14%. You would have still doubled your money if you sold here. You would have tripled your money if you sold here, and how much percent would you have made if you made the whole move? So people get really too hung up on when to enter. You enter when it meets the criteria. The criteria is you having range expansion, 2 closed tights, consolidation, and then the momentum. Okay? And then you judge at the end of the day, is it closing high? Did the volume come in? Right? And then you adjust accordingly. So if this would have at 14, let's say right here, at 1406, it would have met my criteria, which would have been 4% and $1, right? 2 days tight, 2 to 7 days consolidation, and 56%, and 20% move. I would have just entered. Move the stop at the end of the day, or low of the day, and then that would have been it. But you still could have entered at literally the last second of the day, and they would have moved. If you don't trust that the stock is going to kick off a new swing, then you shouldn't be entering the stock anyways. Okay, if you are a swing trader, whether you enter in the morning or in the afternoon, it doesn't matter. The setup should be so strong that you should have complete confidence that the next day, the next 3 days, the next 10 days, it's going to start to swing. So trying to fight for the lowest possible entry is how you get chopped up, and that's how you get a really low win rate. If you just only take excellent setups and you have the complete confidence that it's going to start the swing, then what does it matter if you enter near the bottom of the candle or the high of the candle? It shouldn't matter. Okay. Can I share your screener? Yeah. So this is not my screener. This is StockB's 4% combo scanner. You want volume to be 100,000. You want the change to be $1, but we put it at 90 cents. Price to be above 3. And you want the change percent to be 4% on the day. And then I just have this open just so that I don't have any stocks on my scanner that are negative on the day. Okay, does everybody have that? Okay, and then and this screener will capture everything, right? Everything, and it captures 200, 300, and then you have to go through and you have to pick the ones that meet the criteria with your eyeballs. You have to use your eyeballs. You look, are the 2 previous days tight? How does the 2 to 7 days look? How's the momentum before that? If that doesn't meet your criteria, you go to the next one and you use your eyeballs. If that doesn't meet your criteria, you go to the next one and you go down and you go down and you go down. And so this isn't something that you're going to do 30 seconds after the open. You have to wait. You have to let the scanner pick up stocks, and then you use your eyeballs. And when you do this, you do not have to build a watch list. So you cut down your screen time significantly because you don't have to build this long 30, 40, 50 name watch list and then focus down to 2 or 3. You just wait for the stocks to come to you, then you use your eyeballs. Okay? We'll answer some questions. We are at our time, but we're going to keep going. If you guys need to drop off, you can drop off, but I'm feeling good right now, so we can just keep on going. Does the stock need to be above the 250? The only time I keep the moving averages on my chart, but I just have them hidden. And then so what I will do is, so for example, OPRT. This is a stock that broke out on Friday, and it is below the 200-day, but it's not up against the 200-day. If the 200-day moving average looked like this, that would not qualify, and I would not have taken the trade. But it's got room to go, and in fact, sometimes for fun, I'll even use that as a price target. So I'll go, okay, 30% until the 200-day moving average. So I could catch a 30% move here. But, not necessary. How do you calculate position size based on EC risk percent based on low a day? So anytime I enter a trade, I typically use low of day. And what I'm doing is putting a percent of my account at risk between the entry and the stop loss. So whatever the let's say you took this trade, right? If you're buying at the end of the day, you typically would have your stop loss a little bit closer, something like that, even half the day. But let's say you bought it like this. So you calculate whatever percent you want to risk. So let's say you want to risk 0.5% of your account per trade. Well, the distance here, right, is going to be risking the percent of your account, not the total position size. This could be a 2% position, a 40% position. I don't care about the position size. I just care about the dollars at risk here. Okay? And so at 0.5% per trade, you can have a really crappy win rate and you won't draw down. Now, if you start really messing around and you start to have 1% losses, 2% losses, then you will blow up. So I like to risk 0.5 when market's doing really, really good and really, really strong, and I've been building up a win streak. Then I'll start to bump, and typically I could go 75% when I enter. When I'm at one R return, I'll cut it a little bit down to 5. Sometimes you could even go. You could day one of the swing 75. The next morning you cut it down. You can play with it, and it really the market conditions really matter. Everyone would probably be stopped out day 2 if you're using the OR function. Okay. Can we talk about selling rules? Yeah. So typically, I want to take partials of my risk. So if I'm risking, for example, here, when I entered this trade, my stop loss was, we'll just call it 2.5%. 2.5. Okay. So as soon as I'm at 2.5, I'm going to take a partial because that's 1R. So I take a partial, but I sold out of the position, not because I was at a multiple of risk. I sold here because it gapped up and started trading down. So that's an immediate red flag for me. So I sold. So I'm either selling because of 3 reasons. I'm either selling because my stop loss was hit. I sell at a multiple of my risk based on using partials, right? So I sell 33%, or I sell 0.5%, or 10% of my shares that I own, or I get a red flag and then sell completely. So one of the 3 reasons. 1, you get stopped out, right? The trade just didn't work. You were wrong. 2, I'm selling a partial as multiples of my risk, or 3, a red flag. Okay, can you show another example of when you hold longer, just to understand your trailing rules? Okay, let's see here. This isn't a great example because let's see here. Okay, so I guess I don't have it marked up, but I bought on this day here, 2 tight closes. I know this looks a little different, but it fits the criteria. So you have 2 tight closes here, right? And then you have the 20%. Okay? So this is I know it looks different, but this still meets my criteria. So I bought on this day, and I was immediately taking partials. I bought on this day. I bought somewhere, I think I bought around here. I think it was a little bit higher than this candle. It was a little bit higher in the candle body, but I was very confident because it had all of the things that I look for. 2 tight closes, 20% consolidation. So I think I sold a large chunk here because this is a red flag, right? So I sold a large chunk here, and then I just trailed it. So I moved it to stop. I moved it to break even here, wherever my entry was. And then this is a big candle, right? So then I'm selling more into this, and then I'm just trailing it up. So then I move it up to here, and then moved it up here, and then I think what ended up happening was I ended up getting stopped out here because I just left it under this candle. Under this candle, I sold some more. So all of this here, I was in very small position because all of the money was made here. And then so I just kept it under this candle here, call it 118, and then this stopped me out. How many positions do you tend to buy on the day? The market conditions really matter. Right now, I don't really want to have more than one stock, maybe two open. But when things are really working, I'll buy two in a day. The next day, if I can move those to break even, then I'll buy another two. Yeah, so basically I'm selling at 1R and peeling. Yep, exactly. That is correct. Yeah, so I'm taking some off at multiples of risk, and then I'm trailing it up. But you don't want to trail too tight. Like I said, if I would have moved the stop to the low of this day, I would have been stopped out immediately. So you have to give it some room. You have to give it a little bit of room, but you need to protect your break even. So that's where the experience comes from. You need to protect your break even, but you don't want to choke yourself off. Okay? So you have to give it some room, and you have to just do this hundreds of times. How long do you decide when to trail positions? Yeah, I mean, again, if it's the start of a new swing, right, and you nail the start of the new swing, it's going to get far away from your entry immediately. It's going to go 2, 3, 4, 5 days away from your entry, and then it's going to consolidate, and then it'll, so you just have to understand, and you have to watch. Every chart is a little bit different, but nailing the start of the swing is important, even whether it's swing trading or position trading. If you're buying late, that's going to be your entry is going to be under pressure. Do you trade small cap? Yeah, I don't care. My name on Twitter is Ali_all caps. I trade anything. I do not care. It has to meet the criteria. I'm going to go through some email questions that I had, and then if there's any last questions, please ask in the chat. Okay, so Jordan asked, in a good market, how do you narrow down your focus list? So I try to avoid watch lists. I will put some names on a watch list, but typically I'm looking at my scanner and then using my eyeballs to enter based on the previous 2 days and the first leg. So people get really so I think what happens is people build this watch list, and then anytime a stock starts to break out in their watch list, they buy it, but they're not making sure that it meets the whole criteria. So it's a little bit of confirmation bias. So if just because a stock is breaking out doesn't mean it fits your criteria. So it has to fit the criteria. So I try to avoid watch lists, but I will keep some names on, like Nvidia and things like that. I'll see what they're doing. Another question: how many stocks on your focus list? If they gap up, yeah, I mean it needs to fit your criteria. You need to come up with a criteria, and you need to stick to the criteria. It's the same thing. If you are married, right, and you see another person that looks like your wife, but it isn't your wife, are you gonna go talk to that person? No. You have to stick to your criteria, right? Your criteria is I only, stick to this one sort of thing or two sort of things, and then everything else, just because it looks like it or it's kind of like it, it gapped up a little bit, but if it gaps up 2%, does that mean that it meets your criteria? So you just have to really focus and nail down, and you have to go through hundreds of these charts, and you have to understand what happened the day before the breakout, and then you build your system around what happens naturally in the market. What advice or trading strategy is suited for someone who's only able to watch the first hour of the market? I only trade the first hour of the market. I do watch the market throughout the day, but typically I'm the most active in the morning, and then but this is something that you can do when you are going through when you are going through charts, right, and you're looking, you are basing whether something was a good swing or a bad swing based on the close, right? So let's use this for example. This is not a this does not fit the criteria of the continuation breakout. This is a different type of breakout. But let's just use this as an example. Let's not use this as an example. But this is another type of setup that I do trade. But this is not the continuation breakout, which is what we are talking about right now. So this will be the last chart, and then we will get out of here. Will you trade EBS on May 2nd? We'll see. Let me get it there. So when you're looking at this chart, right, and you're going through charts and you building your watch list, everyone loves watch lists. You are basing whether something is working or not based on the close, of every candle. So technically, right, you could buy the close. So you could wait all day long, make sure you and have your very favorite setup and just buy at the close or 30 minutes before the close, because you are basing like this here, right? If you bought the very close of this and then you sold the very peak, which no one ever does, but just hypothetically, that's 8%, right? If you feel super strong about the setup, right, you would have set your stop loss halfway through the day, right? Because if it's good enough for you to enter, that means that that it's going to work, right? You need to have that much confidence. Okay? So let's say, you bought the close of this. That would have been a 2%. So you would have made 4 times your money, right? 2% stop. It made 8%. Yeah, and you bought the close. People are so scared to buy the close. But you can definitely buy the close. Okay, EBS. Or buy near the close, rather. I think I did buy EBS. I think I did. I remember trading this. May 2nd. EBS. On May 2nd. No, I bought it Yeah, May 2nd. Yeah, I bought it. Yep, that was my entry. But this is not what we're talking about. Okay? This is totally different. But yeah, I did buy it. My entry was 317. But that's not what we're talking about. Now this, right? If this sets up, then you could trade it again. But it has to meet your setup for what we are talking about. Let's say it has another big candle here. And then it starts to boop, boop, boop. Nice tight closes. And then it kicks off again. You could, if you want to, you can keep this on a watch list, right? But it has to meet the criteria. 20% first leg, 2 to 7 days consolidation, and then that breakout. If there's any last questions, please ask now. Otherwise, we're going to end the session. Thank you very much. No problem. You're welcome. Yep, no problem, guys. And if you guys want to drop off, go ahead, drop off. If you have any last questions, just ask, please. Okay, thanks, guys. Appreciate it. Yep, no problem. Please share the screener in Discord. Okay. How to use momentum indicator. This momentum indicator that I have just is a visualization, so I see very quickly when there's 4% breakouts and 4% breakdowns. If I don't want to see a more than one breakdown in the consolidation. So if a stock is making, let's say hypothetically, this was a breakout candle, or rather a breakout here, it would have had 2 breakdowns in this in the setup, and I only want one, a maximum of 1 breakdown in the setup. So we see, like, for example, love your beard, appreciate it. So you see the setup here. There's only 1 breakdown in the whole setup. Okay. If there was 2 of these, boom and boom, then I would not have taken the trade. Okay. Thanks, everybody.